You're watching Wall Street Confidential. I've got here Jim Cramer to help me sort some things out, Jim, okay? I've heard you talk. I read a lot of your stories. On the one hand, a lot of good has happened within the past week, but depression is still on the table, right?
Well, look, we need to throw everything at it. We need rate cuts. Bernanke has said rate cuts are off the table. We need a stimulus plan. No one's talking about a stimulus plan. We need this $700 billion mortgage plan to be passed. If they hold hearings, it'll take too long. Those are all things that could, if not go right, could put us in depression. But you also have to be thinking about if they go right, what happens? And if they go right, then there's some opportunities. But they have to go right first.
Right. Now, as a hedge, you bought GLD for your actual
Right, well, because I have to tell you that there's another way to look at this, which is to say things are in crisis, so let's buy gold. And the only way to get out of crisis is to be inflationary, so let's buy gold. So gold may work in either case, okay? Gold isn't necessarily...
sort of the neutralizer.
Right, this is a very rare case where gold works on chaos and gold works on inflation. I don't see either, you know, there's the likelihood of deflation is taken off the table if the plan is passed. And if deflation is back on the table, it will cause people to have no confidence in the banks, which would then lead to buys of gold.
Right, and you think the plan most likely will get passed?
I do, but you know, the longer they debate it, the worse. And you know, in terms of like what I would try to invest in, you could see that people could be confused. Jim, you're saying that there's a depression, but you're also talking about, say, opportunities in Goldman and Morgan. Well, I mean, Goldman and Morgan, these are actually more easily explained. At Goldman and Morgan were going to go out of business. So they're reflecting Morgan at 11, maybe Morgan at 25, Goldman at 90. We're reflecting the possibility that they could go out of business. And be given the short selling rules that you can't short, and given the investment that Morgan Stanley got, then there's a trading opportunity to both of those. But now let's talk about the problem with investing here. If I'm in a world where on Thursday Goldman and Morgan might go out of business, might go bankrupt, well, that's too dicey for me. So I can't tell people go buy.
Right.
We had a 2-day rally that was equal to the rally after the 87 period. After that 2-day rally, you didn't make any money. So I feel like it's imperative to scale back, put some money in gold, be more defensive. I can't be, on the one hand, 4 days ago, be worried about the Western world, and on Monday say, hey, the Western world's great, I want to buy. So I'm trying to offer a scenario which says, look, if we get rid of the systemic risk, there could be opportunities, but we don't know if the systemic risk is gone yet, so let's be careful.
All right. Well, that's good enough for me for now. Thanks very much, Jim. We'll have him back, of course, every day here on TheStreet.com TV. Stay tuned.